Testing, everybody hear me all right?
Yeah, yes, sir.
Okay, I'm going to start this thing off first by telling y'all the two biggest lies that have ever been perpetuated. First one is the auditor walks in and says to you, I'm here to help you. Second one is the auditor says, I'm glad you're here. So those are the two biggest lies. So with that in mind, you got to understand, I've been in internal auditing for years. I'll give you a quick background history of me. I worked for, let's get this straight, I worked for the Department of Transportation, Georgia, my first auditing job. Worked for Allstate Insurance, my second job. Allstate Insurance basically is, you don't work for an insurance company, let's just put it that way. I worked for Southern Company Services, which is the parent company for Georgia Power and Alabama Power for about 4 years. And that, other than, since my boss is sitting right there, other than the job I currently have, is one of the best jobs I ever had. Worked for Exxon, I established the audit department for Barbara Scott in Charlotte County. Michael Burns is the auditor there now. And then went to Clemson University before I came here, and then I was hired here as the clerk in 1995. What I'm going to try to do today is give you a short overview of the internal audit environment. I don't like standing behind podiums and seeing you walking around. It's not because I'm nervous. I taught accounting for 12 years with students who are a lot more critical than y'all could ever be. So I don't have any problems with that, but I just don't like to stand still. So see if I can get this thing working. Okay, there we go. Warning. I do want to give you a warning. I did. Okay. If this presentation gets too boring and there's a sudden loss of consciousness during the meeting, which happens a lot with accounting topics, then oxygen masks will automatically drop in the ceiling for you to use. I mean, I was talking to the people that made the last presentation. I don't know anybody. You think about it, when you're 5, 6 years old, you want to be an engineer, might want to be an astronaut, a cowboy, military person. I don't know anybody 5 years old wanted to wear a green eye shade and say, I want to be an accountant. Now, if y'all do, you let me know, because you got problems. So it is kind of boring. To start it off, I'm going to tell you a little story. Now, Jim here is past president of the FGOA, and I worked under him. He used to criticize my jokes all the time. And Jeff, I'm sorry, Jeff Smith, future clerk for Indian Springs, for Indian River. And he used to criticize my jokes. But we'll tell you a little story here, just to start off the presentation, kind of break the board a little bit so it doesn't get too bored. 3 men die and go to heaven. St. Peter standing at the holy gate, pearly gate, and he starts talking to each one of them. First man comes up. St. Peter says, now don't you lie to me, I got the book of life right here. The man says, okay. He says, did you ever run around on your wife? And he says, no. He says, I was married 60 years. I was totally devoted to her. Worshipped the ground she walked on. Never even thought about running around. He says, that's great. When you're in heaven, you get to drive the best car we have, which is a gold Cadillac. Fantastic. Jumps in his Cadillac, heads down the streets of heaven. Second man comes up. He says, now don't lie to me. And he says, I got the book of life here. He says, did you ever run around on your wife? He says, well, you know, when I was young, I was in the military and I traveled a little bit. A few times I didn't really mean to. I was real sorry about it. It just happened when I was young. He says, you're right. He says, well, you're in heaven, you get to drive a Toyota. He says, okay. Third guy comes up, his name's Tim. He comes up, and he says, Tim, did you ever run around with your wife? Now, I got the book of life here, don't you lie to me. And I said, oh yeah, every chance I got. Anytime, anywhere, any place. And he says, okay. He says, well, you're in heaven, you get to drive a scooter. I said, well, that's not too bad. So I jump on the scooter, follow the guy on the Toyota, catch up with him. We're driving down the road. And the man in the gold Cadillac is crying. He had pulled up on the side of the road and was beating his head on the steering wheel, screaming and hollering to the top of his lungs. We pull over to the son and says, man, what's wrong? You got the best car in heaven. Something wrong with your car? He says, no, I just saw my wife going down the road on a skateboard. There's a moral to that story, but since my boss is here, I really don't want to tell it. So anyway, outline my presentation. I'm going to talk about the different types of audit environments that you get involved with. Definition of internal audit and internal control. Now, the previous speakers in the last class got a little bit into some of the internal control environments, so I probably won't get that as much. Qualifications and qualities of a good auditor. Audit approach. Audit dilemmas. I'm going to hit a little bit on Sarbanes-Oxley and SAS 99. These are situations that came about due to some of the Enron and World.com, all that kind of stuff that was going on back in the 10, 15 years ago. And it's not quite as important. It's really not as important for the governmental environment, but I will hit on then auditing within a county environment. I mean, as you know, we got 67 counties here in the state of Florida. Every one of them, as far as I know, do things differently. Some of them have big audit departments. I'm a one-man audit department. Some of them that I'm aware of audit, and they work under the clerk, and they don't audit nothing but clerk functions. They don't audit anything on the board side. They don't audit anything outside of the clerk's environment. So it is a different environment with a governmental environment, which I'm not telling y'all anything about. And then some summary of previous audits and findings that I had, and then naturally questions and answers. You have independent CPAs. You have the internal auditor, which I am. You have financial auditors. You have operational auditors, which I do some aspects of. You have compliance auditors. These are people, if any of you are dealing with grants, most of the work that's associated with A133 audit has to do with compliance, if they're complying with the requirements of a particular grant and a particular agency. You have information systems auditor, which I'm happy when my computer comes on. So I have no expertise in this area. If something happens to the presentation, then y'all get to go to lunch early because I wouldn't know how to fix it. Independent CPAs, public accountants consist of the Big Four international CPA firms as well as national, regional, and local firms. Accountants in this area may pursue interest in auditing, taxation, financial accounting, or advisory services. Their purpose, let's see if I get this thing right, is auditing the financial statements. They express an opinion on the financial statements. That's their main purpose, to say that the financial statements, the balance sheet, the statement of retained earnings, the income statement, that all of those are fairly represented. They don't say they're actual, because again, as some people mentioned in the previous presentation, that would be too cost prohibitive. But they're saying that they appear reasonable. And that's their main objective. They do some internal control verification now, and I'll get into that later on. Internal auditors is defined by the Institute of Internal Auditors as an independent, objective assurance and consultant activity designed to add value and improve an organization's operations. It helps an organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes. How many people truly think that an internal auditor is independent? Raise your hand. Because you're not. I've got a boss. If I'm looking at something or doing something that he feels like it's inappropriate, he can tell me not to do it. And that is true with any internal audit organization. I interviewed many years ago with the county of Kissimmee is in. They had an audit department there. And I interviewed with the board of directors, and they kept beating me to death on the fact that, are you independent? I told them, I'm independent of the function of it, but I'm not totally independent. Nobody is totally independent. I'm pointing this thing the wrong way. I keep pointing at the screen. Types of internal audits. I tell you that all of audits are not the same. The purpose and goals determine the type of audit. There's financial audits. You know, we don't really get that much in verification. When I say we, I mean internal auditors. We really don't get that much into verification of financial issues. I'm an operational audit. I look at operations, try to make recommendations for improvement. But you do review financial transactions on a continuous basis. Operational audits, which is the one that I'm mostly involved with, and been involved with most of my life, we review the performance of a program or a service and then make suggestions for improvement. The primary goal is to determine whether objectives are achieved effectively and efficiently. To me, internal auditors bring a unique aspect to the whole process. They're probably the only group of people that see processes over departmental lines. I work for the clerk, and he's got numerous functions and numerous activities going on. If I go in and I follow a process through all the various departments, I see the processes it goes through. People that are in those individual departments don't see the whole process and really don't understand it. They're worried about their own individual process. So I think that's a good, I'll get this thing right here in a minute, it's slower than I thought it would be. Grants. Grant audits include financial and operational elements, but the focus is on compliance with the financial terms of the grant needs. I'm assuming that just about everybody in here has grants and have to prepare the grant schedule. The county is obligated to review grants to determine whether funds are spent for the proper purpose when grant funds are received from the state or federal government. If you receive over $500,000, if you pay out over $500,000 in expenditures, I'll get it right in a minute, then you have to have what they call an A133 audit performed. A33-1 audit is really a compliance audit that those particular grants are meeting the requirements of the grant agencies. Construction project audits, this is an area that probably I don't do enough of, and there's big dollars in it, and usually every time you read about some kind of fraudulent activity, it is involved in the area of construction audits. So, but you also have construction audits including reviews of construction project costs and performance terms. You'll read in the newspaper every now and then. I think Ken Smiles sends around all these newsletters where somebody was cheating somebody on the construction audit. And that's where big bucks are. It's easy to cover it up. Information system audits. This is a specialized field. I didn't really get a lot in my background, but I'm a CPA, CIA, and a CMA, and a few other initials I don't like to mention in public. But information systems is one area that I never really got enough experience in. And I feel like I'm short in that area. But it's a very specialized field. Fraud audits. A fraud audit investigates whether the organization has suffered through misappropriation of assets, manipulation of data, as the previous presenters mentioned, omission of information, or illegal acts. It assumes that deceptions were intentional. I'm not a fraud expert. I haven't had fraud training. And needless to say, I mean, y'all read the newspapers and everything, we've had several instances of fraud in our community, and I have not been part of the investigations at that time. You have to be specialized in that area. You know, I don't mind coming in after the fact and helping them put controls in place or procedures in place that would help them. The last thing an auditor wants to do is mess up an investigation that the DLE or the FBI is involved in. Other services. I perform other services at the request of the clerk or request of the county manager. So if they've got something they want me to go look at, and we're pretty lucky, we've got a pretty good working relationship in our county. We have had county managers, department heads come up and ask me to look at something, which is kind of unusual for all of us. Okay, I'm sorry about this, I still have it. The internal control system. Now the previous presenters got into this some, so where it seems to get repetitious, I'll try not to bore you too much with it. The internal control system provides for safeguarding of assets, proper reporting of transactions, and the efficient and effective accomplishment of the county's goals and objectives, including compliance with federal, state, and county rules and regulations. Components of internal controls. The control environment. Now, they hit on this one. By the way, y'all, I do want to introduce somebody, because I made this presentation to the Clerks Association, what was it, Jim, 6-7 years ago? And Jim Ward back here made the presentation with me, and he was involved in a lot of this. And it was like the Mutt Jeff, he's tall and handsome, and I'm short and ugly. So, you know, it was a good combination. I should have gotten you to work with me this time on it. The control environment is the environment that you operate in. Y'all can read this. I'll tell you my layman's terms of it. It's management's attitude toward internal controls. Management's attitude toward the environment they work in. When I worked for Allstate Insurance one time, we had an office down in St. Petersburg. And I was the lead auditor on the job, and I had 5 little auditors running around behind me, baby auditors. And nothing worse than a bunch of baby auditors, because they think they're, you know, discover the world and everything's bad. So, but anyway, we came into the lunchroom at Allstate Insurance, And the manager there, the district manager for Allstate Insurance, jumped up on one of the kitchen tables and said, "Don't tell these damn auditors a thing." And that kind of attitude, it hurts your feelings a little bit, I'm a sensitive guy, so, you don't, management's attitude is very important in this. Almost everybody I have audited in the county, and I won't say they're welcome to see me there, but at the same time, if you find something, they're willing to try to improve the process. They're willing to make it better. They know that, and especially in this day and age, the previous speakers brought it up, everybody's had to cut back on people. In our county, we've had four early buyouts, something like that, for employees. And we're losing people who have good experience. People getting those early buyouts, those early retirements, are the ones with all the experience. They're the ones with all the knowledge. When you lose those kind of big people, you lose internal control. So management's attitude to want things to be better, want things to improve, that's the most important part of controlling power. If they don't want it to improve, it ain't going to improve. Control activities are those activities that provide a reasonable level of insurance. And again, reasonable, because everything has a cost-benefit analysis associated with it. It'd be real nice to have every department segregated down to the point that everything was being done differently by different people. That's just not humanly possible, and it's not effective. But they provide a reasonable level of assurance that the unit's goals and objectives will be accomplished. Absolute assurance is not possible due to cost, collusion, human error, and management's ability to override controls. Control activities include authorizations. You need to have proper authorizations for transactions. Y'all heard them mention this one, separation of duties. Separation of duties is probably one of the most important ones you have. And in smaller counties, and with reduction in staff and employees, that separation of duties has become a more important issue as we go along. And the only way sometimes that you can alleviate by that is to have what they call compensating controls. And by that you might have more supervisory review, more walkthroughs. Physical security of assets, that's where inventory accounts come in. Control of assets, access limitations, especially with technology, with computers. Reconciliations, bank reconciliations, account reconciliations. If you reconcile your accounts and your financial statements on a quarterly basis, if you have a problem, then you can solve it right then and there. Inventory accounts, I just mentioned that one. And control activities are designed to provide a reasonable level of assurance that the goals and objectives will be accomplished. Monitoring. Monitoring ensures that the internal control system is operating as expected. It should be performed by supervisory personnel and focus on high-risk areas. It identifies changes in circumstances that may require changes to the internal control system. Where internal controls are weak, increase, and I just mentioned this, compensating controls such as supervisory reviews are necessary. So monitoring is very important. You get people in, they're doing a job, and they're doing the same job over and over again, and gets routine, and the supervisor, no reason for me to go in there. Well, I've always, when I've performed operational audits, I've always recommended that the supervisors do nothing more than walkthroughs. The fact that you're walking through and you look over somebody's shoulder or something every now and then indicates to them that you're looking at what they're doing. You may not be. Here you are, Jim. Top 10 signs that you have hired a bad accounting. Now, David Letterman wrote these, so don't hold these against me. Number 1, ask you how many monies you made this year. Pretty bad sign of bad accounting. Number 9, the calculator he's been adding numbers on is actually a TV remote control. Pretty bad sign you got bad accounting. 8, what he calls tax forms, most people call paper hats. I didn't write it, so not all of the fun. Accompanies you to your audit wearing a giant bunny suit. It's a bad sign, man, if you have your accountant there. 6, takes you aside and whispers between you and me and the lamppost. A 9's more or less the same thing as a 6, right? You're in trouble. 5, when filing out your Form S, is what color crayon should I use? Big trouble. 4, you recognize him as the guy who was horse shack on Welcome Back, Kotter. Don't think he was a good accountant. repeatedly grabs himself and says, deduct this, am I right? I didn't write it, by the way. I don't want to get in trouble. Tells you that strangers living in your house can be declared as dependents. Well, and then last one but not least, his only other client was Willie Nelson. You know you're in trouble if his only other client was Willie Nelson. Qualities of a competent auditor. Not necessarily my qualities. I do consider some competent. The reliance placed on auditors by those of who would benefit from their services imposes an obligation that all auditors maintain high standards of technical competence, morality, and integrity. Auditors must understand the meaning and purpose of codes of professional ethics applicable to their work, and they should be capable of making the mature judgment required in applying the codes to audit situations. Audit personal qualities. One, attitude. A polite, respectful, and professional attitude must be displayed in all audit contracts. I consider myself a consultant. That's the way I audit. Other people audit differently. You know, they don't see themselves as a consultant. When I worked for Southern Company Services, that was our main purpose, to help management. I feel like that's my main purpose here, is to help my manager, help the clerk, help the board of county commissioners perform their job more efficiently and more effectively. Teamwork. The auditor must be capable of working effectively with team members in all situations. Well, I'm assuming that all of y'all at some point have dealt with auditors. My audit approach is to go in there, it's like the Holiday Inn, no surprises. I go in, I work with them. 80% of the findings I normally have, they tell me. Because they know what's wrong in their environment. They're the experts in that environment, not me. You know, we're dealing with the state auditors in our county right now at this point in time. And it's taken them 3 weeks just to kind of understand some of the operations. When you go into an environment, and I've told people this before, the auditor is the dumbest person in the world when he walks into a new environment. He don't know how the operations runs. He don't know how the people communicate, how things are translated. So you have to work with those people, and you have to let them know that you're there, like my joke again, to help them, sort of. Adaptability. The auditor must be capable of adapting quickly to varied assignments and rapidly changing audit conditions. Your audits can change. When I first got here, and I'll bring it up in a little while, but I was doing an airport audit 12, 13 years ago, and my main contact person passed away. Well, I can't go running in there because I can't continue the audit. I had to kind of adjust my audit schedule until everything got back into track. So you have to be adjusted. Okay, keep hitting the wrong button. So, determination. The auditor must have the determination to work aggressively to achieve the audit objective, to resist pressures, to divert from audit goals, and to deal with difficult issues and situations that emerge in the course of audits. As I said earlier, I've worked for just about every kind of audit environment you can think of. When I worked for Allstate Insurance, we did cash counts at these little kiosks, and I think back then Allstate was part of Sears, and they would be in the Sears store, they have kiosks, we count the cash. If their cash did not add up to their sales, they were fired immediately. So you can begin to understand, you know, how some people might put pressure on them. Well, don't count my cash, come back tomorrow or something like that. So you have to be determined enough to follow your audit procedures and program that you have in place. Communications. The auditor must be skilled in both oral and written communication. The auditor must be a good listener, exhibit an interest in and respect for persons being interviewed. She and he must be conscientiously candid and communicate all impressions, both positive and negative. People are scared to death of auditors. You know, I don't know why, but they are. And like I was telling y'all earlier, when I interviewed for the job in Osceola County, or whatever county that was, they had a committee of 15 citizens before I met with the Board of County Commissioners. And this person standing beside me looked at me and says, Mr. Pozza, what do you think people think of auditors? And I said, well, the only people hate worse than auditors and used car salesmen. Well, I didn't get the job because the guy jumped up and said he was a used car salesman. So you can see where some of these things don't work real good. Stylish dresser. Auditors must dress appropriately under circumstances. And by this, I mean, and I've done construction audits before. By this, I mean, if you're going onto a construction site, I audited Plant Vote, a nuclear power plant. up in Augusta. If I walked in there with a three-piece suit on, those construction guys would probably put me in the cement somewhere. So you've got to be able to communicate with all levels, upper management and lower management. I have a picture of me here where I had a closing conference, and I was really surprised because I had a bunch of findings, and some serious findings, and the closing conference didn't last for about 10 or 15 minutes. I don't know why. But that's what I dressed like when I went to the closing conference. And it went pretty quickly. It wasn't one of yours, Don, by the way. This was the previous job. And so you can see, dressing is pretty important. Next one is leadership. Lead auditors, which I was. I mean, I haven't been a lead auditor here because I'm lead myself. But when I worked for Southern Company Services, I'd take 6 auditors out on the team. They must express leadership qualities and management skills in addition to the qualities expected of audit team members. Doctor's story here. Patient was at the doctor's office after undergoing a complete physical exam. Doctor says, I have some very grave news for you. You only have 6 months to live. Patient asks, oh, doctor, what should I do? Doctor replied, Marion County. Will that make me live longer as the patient? No, said the doctor, but it will seem longer. Us accountants have, unfortunately, a bad reputation. You know, and I'm trying to do everything to counter that, but it don't always work. Some of the audit steps. And somebody let me know, you know, I'm up here rambling away, so somebody, if I get too carried away with the time, which I think I'm doing fine on, somebody let me know and just kind of cut my throat and get out of here. Okay, audit steps. Steps in performing an audit. Notification of an upcoming audit to the respective manager of the auditing. So what we end up doing is somewhere along the line you decide to perform an audit. I'm getting close to that thing, that line. And somewhere along the line, either through the clerk or through the county manager, myself and the finance director, we get together quite a bit, discuss different issues, because he's more closely related to the board and deals with board issues all the time. You determine you're going to do an audit, you notify them that you're planning on doing an audit. Then you set up a preliminary meeting or review with the management of the auditing entity. You go in there, you get organization charts, you get any documentation they may have for their processes, and then you come back and flow chart, review the laws, anything that will help you understand that environment. As I told you earlier, us auditors are pretty dumb, and we really are. When we walk in, we know accounting, we know flow charting, we know controls, but we may not know the cashiering process for the clerk's office or something like that. So it takes a while to understand those things. You develop the audit program. What I usually end up doing, and I've been doing this for 40 years now, I guess we're pretty close to it. What I end up doing is I go in, have a preliminary review, meet with all the people, try to find a key contact person in there. Normally what auditors don't want to do is they don't have to be dealing with 10 or 11 or 12 different people. They want to filter, and I'm assuming that most even internal, external auditors do this, but they want a key contact person that they filter their information through, their request through. So you try to find out key contact people, schedule times. You know, you go and do an audit, people have vacations. I mean, they're not going to sit there and give up the vacation because you, the auditor, is coming in. So, field work. Field work consists of audit tests, analyses, reviews, and documentation of work performed. As audit findings are noted, they are discussed with auditing to allow immediate correction when applicable. All work papers are reviewed for compliance with auditing standards during this phase. During this phase, this is where I get back to the Holiday Inn expression, no surprises. If I'm out there performing an audit and I find something that needs to, or that I think needs to be corrected, then I give management at that point in time the opportunity to correct it. And if they correct it, I'll state so in the audit report. I'll say, well, this particular deficiency was corrected during the course of the audit. So that gives them time to correct it, and gives them time to implement any new programs that they may have to implement. Exit conference. The exit conference is held with auditees, officials, and all findings, recommendations, and suggestions are discussed at that particular point in time. You know, and what I end up doing is I request I usually give them 2 to 3 weeks to put in writing any management response they may have to my findings. Now, I hope at this point in time, at the exit conference, that probably 90% of the findings have either been corrected or management agrees that there was a problem there and they've got some kind of corrective plan or action in place. And if they don't, then they, you know, I'm trying to sit here and think. I mean, I've been doing this stuff for a long time, and I cannot really remember any audit finding that I've ever had that management said that we just don't agree. You know, because by that time we've already hashed it out. If they don't agree and they show me new information during the course of the audit, then I'll change my finding. You know, if they're right, I don't mind backing off on my finding if I'm wrong. But they need to prove that to you. Otherwise, they need to come up with some kind of corrective action. Okay. And then the audit report preparation distribution. A report draft is forwarded to the responsible auditing official for the response, and auditing responses are included as part of the formal audit report. The audit report is distributed to the clerk, and the clerk transmits the audit report to the Board of County Commissioners and responsible county officials. And upon request, the report is available to all interested parties. And by this time, this is normally just a mere formality. Internal auditing may perform a follow-up audit approximately 1 year after the audit report is released, and follow-up audits review the status of implementation of audit recommendations and any other significant issues that have come to internal audit's attention. We don't do that as much here because we're a little bit more closely attuned with some of this stuff. So once I issue my audit report, I've got people running up to me and telling me if the corrective actions have been implemented or not at that point in time. 5 dilemmas for every internal auditor will face. 1, how much to audit. Now, in a one-man operation, this is a real dilemma. I think the very first big audit I did in Okaloosa County was on the airport, and it took me almost 2 years to complete. I bit off way too much, and I was looking at every function in the airport. Again, one of my contact people passed away at the time of the audit. Plus, when you're a one-man operation, you have other functions going on. You have ad hoc reviews you have to do. I do all the audit work for the external auditors on the grant strategy. So you need to understand the scope of your audit. So anybody that's a one-man audit team, I would recommend that they limit their scope as much as possible when they're performing an audit. Try to narrow that down to 1 or 2 important issues, and then if there's some other areas you need to get into later on, go into it. How much to communicate? The Institute of Internal Auditors and International Standards professional practice of internal auditing standards are very flexible in providing direction on communicating results. Standard 2410 simply requires that the communication of the engagement results includes the engagement's objectives and scope, as well as applicable conclusions, recommendations, and action plans. The temptation is always present to add a lot more than the minimum requirement. I know auditors, especially auditors when I worked at Southern Company Services, that thought they got their Christmas bonus based on the size of their audit report. And they include everything in there. I think as an internal auditor, you have to use some judgment. If some minor findings have been corrected during the course of the audit, there's no real need to include that into an audit report. But that's my opinion. Some people feel like everything should be in there. So, how to respond when your audit report is edited. Report writing and editing are enduring sources of frustration for everyone in internal auditing. The first time one of your choice phases or report narratives is eliminated or edited extensively by your supervisor may be frustrating or even disheartening. Don't know where you're at. Seek to understand why the edits were made and learn from the experience of those more seasoned than you. If you really feel strongly, then make your case rationally and without emotion. In the end, though, you will have to accept the decisions made by those who are ultimately accountable for the quality of internal audit management. So in the end, your boss is the boss. And remember that. One of the things I had as a young auditor with this, I was working for the Department of Transportation. We did mostly cost reimbursement type audits. we'd go out and we'd look at railroad companies where they put up crossing signals and intersections of our roads and highways and stuff, and we'd have to pay them for it. And I had some significant findings. I guess I think it was Seaboard Coastline at that particular point in time. And I forgot how much money it was, but I felt like they owed us a lot of money. Well, my manager at the time, like I said, this was 30 years ago, decided that for whatever reasons, to be a nice guy or political reasons or whatever, we weren't going to pursue those findings. And at that particular point in time, being a young person, I think it was hard on me. I put in all that effort, all that time, thought I had a good finding here, you know, saving DOT some money, and my boss sidestepped it. Well, he was the boss. And so, you know, it's a lesson you have to learn sometimes. May not like it, that's the way it is. How to deliver a balanced message. As internal auditors, it's easy to fall into the trap of reporting only negative results. After all, that is what they pay us for, all right? It is important to remember that we actually add value by providing insurance on the overall effectiveness of risk management, risk management, control, and governance processes. A balanced report that also indicates satisfactory performance where warranted is an important component of any internal audit report. We shouldn't limit assurance to what is working well. And that's true. If you look at most internal audit reports, they're negative. On my bigger audits, and it's Southern Company Services especially, but on my bigger audits here, I have incorporated a positive point page in the back, saying that this is what they're doing right, this is what they're doing good. Management likes to get a few attaboys every now and then. They like to think something they're doing out there is correct, not everything is negative. And unfortunately, the way our audit environment's designed, a lot of times we only report the negative. How to respond when management pushes back. As a new internal auditor, the first time management or other operating officials take strong section to your draft report or audit results is apt to be a significant emotional event. It is. You know, I've had, here in the county, I haven't had as many objections. Maybe I'm just older and they feel sorry for me or whatever. But in some of the other companies, I worked for Southern Company Services, I had a plant manager who was an engineer, Plant Daniel in Pensacola. I was the lead auditor on it. The day we walked in, he told us he didn't want us there, he didn't ask for us there, and we could leave anytime we wanted to. Yet, at the end of the audit, he was our strongest supporter of all our findings. You know, it's important, very, very important for internal auditors to communicate any findings, any issues that they have with upper management. The worst thing they dislike is surprises. They don't want to come up at the end of the audit and find out that you found something significant. You had to communicate it to anybody. Now, if you're doing some kind of fraud audit or something like that, and they just say that's different. Sarbanes-Oxley. I'm not going to get a lot into this. This was passed 10 years ago, as you can see, but this made some significant differences what the external audit groups do in their audit process. For the most part, Sarbanes-Oxley only applies to for-profit companies. It doesn't apply to government, but you'll see some of these, and I'll just go through this real quickly. You'll see some of these issues have filtered over, such as audit committees. You know, it's recommended now to most governments, if they can, to have audit committees, where you have to have an audit committee to profit for it in this industry. So, get into it. And the Act is actually named after its two main architects, Senator Paul Sarbanes and Representative Michael Oxley, and of course followed a series of very high-profile scandals such as Enron. Had a lot of issues going on then. The Sarbanes-Oxley Act itself is organized in 11 titles, dealing with internal control, and the Act also created a public company accounting board. Services outside the scope of the practice of auditors. They found out during Enron and World.com and some of these others that some of these CPA firms, the Big 4, the Big 10, Big 12, how many ever they got, that they were also performing non-audit services for these companies, which affected their judgment when they were doing the audit. You know, didn't leave them totally independent. So Sarbanes-Oxley, one of the sections, Section 201, requires that they can only do 5% of the revenues can only come from non-audit services such as consulting or whatever. The lead auditor or coordinating partner and the reviewing partner must rotate off of the audit every 5 years. Again, this is with for-profit industries. But some of this is gradually filtering over into government and some of the other non-profit environments. The accounting firm must report to the audit committee all critical accounting policies and practices to be used in all alternative treatments of financial information. Conflicts of interest. The CEO, the controller, and the chief accounting officer or person in an equivalent position cannot have been employed by the company's audit firm during the 1-year period preceding the audit. A lot of these companies would come in and hire, you're the lead auditor, they would hire you because you do a good job. They need somebody in there to cover their financial statements. Corporate responsibility for financial reports. The CEO and CFO of each issuer should prepare a statement to accompany the audit report to certify the appropriateness of the financial statements and disclosures contained in the periodic report and the financial statements associated with it. Improper influence on conduct of audits. It shall be unlawful for any officer or director of an issuer to take any action to fraudulently influence, coerce, manipulate, or mislead any auditor engaged in the performance of an audit for the purpose of rendering the financial statements materially misleading. Now, one of these catch-alls on this is the word materially. What is material? Is it 5%? Is it 10%? We've had misstatements before on some of our financial statements that were minor in nature, and auditors will tell you they're not material. They don't affect. When you discuss something as being materially misleading, then it affects the person's judgment who's reading those financial statements. And especially in the for-profit industry, a lot of people rely on these financial statements because they're buying stock or bonds from those companies and investing in them. Disclosure of audit committee, financial expert. The SEC shall issue rules to require issuers to disclose whether at least one member of its audit committee is a financial expert. Get people on these audit committees, they don't even know what an auditor does sometimes. Corporate and criminal fraud. It is a felony to knowingly destroy or create documents to impede, obstruct, or influence any existing or contemplated federal investigation. Well, that's just common sense. I think that auditors are required to maintain all audit or review papers for 5 years. And in addition, as a result of this act, all publicly held companies are required to have an internal auditor and an audit committee. Again, publicly held companies. I'm pretty sure there are counties here in the state of Florida that don't have auditors, and a lot of them don't have audit committees. SAS 99, now this was brought up a little earlier. SAS 99 is to serve as the cornerstone of its anti-fraud program. The ASB of the American Institute of Certified Public Accountants issued statement number 99, consideration of fraud in their financial statements. It used to be the auditors would walk in, and I'm sure all of y'all remember this. I know I and Gary Stanford, who's our finance director, every year our external auditors come in, sat down with us, asked us about possible fraud, and they document it. Used to be, they'd ask you about it. Well, do you know of any fraud going on? Where do you think it is, et cetera, et cetera. But now they have to document it and actually evaluate the risk involved there. So they do more. They still don't do a lot. An external auditor, for the most part, as the gentleman said in the previous presentation, is not going to catch fraud. But they can at least tell you if the environment is conducive to fraud or if you've got pretty decent internal controls in place. Even then, you've got to understand that fraud, by its definition, is an act to, intentionally mislead somebody. So even with that, internal controls, with external auditing looking at it, under the right circumstances, fraud will occur. Auditing in the county environment. Well, one of the things that's different about auditing in the county environment is, number one, you've got 67 counties here. I would dare to say that every county in the state of Florida that has an audit department, that their audit department is unique from the other audit departments. Orange County probably has 30 auditors. Pinellas County, Hillsborough County probably have 20, 30 auditors. Don, Okaloosa County has 1 auditor. Some counties don't have any. So there's really a real difficult situation there in the sense that you're trying to compare counties and compare audit styles and doing benchmarking, whatever, because the counties are different. The environments that you operate in are different. Some counties take a real strong stand on certain issues and other counties don't. The one unique thing you have about operating in a county environment is the citizens. The hardest audit I've had in the 17 years I've worked for Okaloosa County was an audit of PAWS, the Panhandle Animal Welfare Society. And in that particular case, everybody had an opinion. You either had somebody who loved those little animals and they want to put them in a fur-covered hotel and have maids farm and feed them steaks, or like the north part of the county, they felt animal control was a god. Wasn't much in between. And I mean, you know, people coming out in the newspaper fussing about it, and you wouldn't think about that because I've had airport audits, I've audited solid waste, I've audited other environments, but that was by far probably the most controversial audit I had to deal with, and really, to be perfectly honest, the hardest one. You're dealing with constitutional officers. Now, luckily, I don't have to do that much. I mean, as the internal auditor for the clerk, I'm somewhat shielded from that process. I mean, I do talk to the Board of County Commissioners. I have done audits for some of the other constitutional officers as they request. As y'all know, that I cannot go into another constitutional auditor's environment by state law unless they ask me to come in. And I just recently had was the property appraiser done, asked me to come in and look at a program that they were working on, and Don said, yeah, take him, I'm tired of him. And he didn't say that. And so, but you do have the constitutional officers you deal with. And as we all know, you get politics involved. Politics, there it is. Reporting structure. Reporting structure is a little unique. And when I worked for Southern Company Services, when I worked for Exxon, when I worked for Allstate, you were in a reporting structure that when you had findings, your boss made sure those findings got implemented. You know, here in this environment, I work for the clerk, and the clerk of the court has no real power. Don't get in trouble here. The clerk of the court has no real power over the operations of the board, day-to-day operations of the board. So you're really a separate entity auditing the board, auditing another constitutional officer, and it has to be a cooperative effort there. It has to be a cooperative effort. Now I realize, and he's not in here, but White Rock does it a little different, and he's a good friend of mine, and I admire the audit work he does, but he does it a little bit different. Summary of previous audits. As I indicated, I did the airport operations audit. I guess I didn't space my stuff on this right. But I recommended that they did establish written procedures over the grant process, hangar leases, contracts and accounts payable and delinquent accounts. They had a lot of leases that just weren't being renewed on a regular basis at the time we did the audit. They even had one airline operations that they had not renewed the lease on, and they were still operating there. So we recommended that they get all that shored up, and as far as I know, they have. I think they're still having a little trouble with some of their delinquent accounts there. Solid waste operations, again, had very little franchise agreements. So we have franchises that we give out to the different solid waste haulers in the county. Used to be on the north part of the county, you had about 4 different operators that worked on the north part of the county. And those garbage trucks, you have 4 of them on the same day going up down the same road, picking up different garbage cans. Now the county has granted franchises and monopolies to certain areas just because of the economics of the situation. Establish written procedures over receipt and tipping fees. They weren't covering that too well. Establish interlocal agreements with other governmental units using the transfer station. We had other cities. I can see Fort Walton Beach was using the transfer stations, the county's transfer stations for the garbage. We required them to get formal interlocal agreements on that. Growth management, cash receiving. We recommended that they have an additional employee as a backup. Some of their segregation of duties was pretty loose. same person doing 10 different functions. And management needs to perform surprise cash counts. You have a lot of cash coming into growth management, people coming in paying building fees and stuff like that. And they have the money just sitting everywhere, so they finally have to shore up on some of that. And coordinate with the IS department in order to provide necessary enhancements to the program. They had some programs there that really needed to be updated. And this, again, is one of the functions that an internal auditor is pretty good at doing. I had to go to IS, get the IS department, county's IS department to meet with growth management. For whatever reason, they couldn't seem to coordinate the effort. So, and it worked out real good for them, for everybody involved. Okay, come on. Oh, benefits. As a result of the audit service provided, the county is better assured that risk is being managed effectively and that controls are in place, which will help to ensure assets are adequately safeguarded. All the things that internal control talked about are your compliance with laws and ordinances and policies. Transactions are properly authorized. Information provided to management and or to the public is accurate and reliable. Resources are used efficiently. Programs are effective in meeting established objectives. And finally, almost finally, you might be taking the county too seriously if you think the Gap store at the mall sells accounting standards. If you think the CMA awards on TV relate to the accounting. CMA is Country Music Awards, Certified Management Accounting, which I know. You might be taking your accounting too seriously if you cheer at the Oscars when they announce the accounting firm in charge of the envelopes. You read film credits to identify the name of the production accountant. Now, I've actually done that. Just because they do put the accountant's name on there, and they even have auditors in it. I think it would be neat to have that job. You double or underline your mother's name when preparing her death notice. You're taking your job too seriously. You do an empty net profit value calculation before you decide not to have children. You think that Greek oracles were early developers of database accounting systems. Finally, you might be taking accounting too seriously if you schedule a meeting with your spouse to discuss the past year's performance. That might be a bad thing to do. I just thought I'd let you know that. And your ideal of absolute terror is an unbalanced T account. Now, I'm going to tell you a quick story here. Final story, and then I'll take any questions or concerns you may have, or you can run me out of town, however you want to do it. Man's wife's giving birth in the hospital. Jeff, I think you've heard this one, so you don't have to listen to it. Man's wife's giving birth in the hospital. Man runs in. He runs into the hospital and says, Doctor, my wife's giving birth. He says, and you know, she's had it yet? He says, yes. He says, I hate to tell you, but she gave birth to an 8-pound head. A head? He said, a head? Now, what am I supposed to do with a head? He said, this is your child. You need to love the head, nurture it, raise it just like you would any other child. He started thinking about it and he said, okay, you're wrong. So after 2 years of raising the head, his wife had enough of it and she left him. And he raised the head on up to his 21st birthday. Went to a bar, said, come on, Dad, let's go celebrate your birthday. And he took the head under his arm, walked into a bar. He set the head down on the counter. The bartender looks at him and says, man, what the heck is that? So why are you bringing this in here? And he says, well, that's my child. And he said, my wife left me. I've raised it by myself. I've loved it. I've nurtured it. And it's his 21st birthday. And I'm here to celebrate his 21st birthday. He says, okay, I am totally sorry. All the beer is on me today. He said, okay, it's cool. So he takes the head, pours the beer down, poof, out pops the torso. I said, man, that's great. That's fantastic. Give it another beer. Poof, out pops 2 legs. Wow. Give him another beer. Poof. You can say, out pops 2 arms. And there he's standing in front of him naked, the son. And he's hugging him, he's kissing him. He says, oh, son, this is the greatest thing in the world. Let's drink one more beer to celebrate. They drank 1 beer, gobbled it down, poof, the son disappeared. Moral of the story, he should quit while he was ahead. And I'm quitting now. So any questions or concerns? Yeah, Ken.
Yeah, you mentioned that you use a consulting focus. How do you balance? You mentioned that you use a consulting focus in working with the different departments. How do you balance a consulting focus with audit findings?
And that's a good question, and I really didn't hit on that a lot. What I do is when I have an audit finding, there's no saying in auditing, guys, Southern Government Services told me this is my managers, document, document, document. So when I have an audit finding, I normally have that audit finding extremely well documented. And for them, like I said, I don't think I've ever had, once I've gotten to that stage, to the end of the audit, I don't think I've ever had anybody disagree with me. Because I documented so well and I communicated during the audit process. So I hope that answers your question. Any other questions? You only get one. No, go ahead.
What's your view on rotation of outside CPAs?
I have a mixed emotion about that. And I'm glad you asked that. Did I tell you to ask these questions? Let me know later on about it.
You did ask me to show up.
I think it's a real good idea. There's mixed emotions about that from my perspective. One, I think it's an excellent idea to get somebody in there with new ideas and new concepts. The problem is when you bring somebody in with new ideas and new concepts, then you really, as the clerk and as the finance department and as the operational departments for the county, you have to retrain those people. How many people in here have had new auditors? I mean, totally new auditors? Well, I guess not too many. And it's a laborious process. We changed lead auditors this year. Same audit firm, but lead auditors. I quit this year. It was maybe last year, year before last. I can't remember who done it. But I mean, they were coming in and they were asking questions that the other previous auditors probably would have asked. Like they were asking for confidential information, you know, child support, stuff like this. Well, that really is confidential information. Should have had access to that information. They would have known that. So, like I said, I have mixed emotions. I think it's a good idea, but there's a price to be paid in familiarity with the county staff, familiarity with the people. But at the same time, the familiarity can breed laziness, and so I think it's a good idea. They recommend it as best practices, I think, to try to do it. And we have gone out, the county has gone out and submitted bids, I guess about 2-3 years ago, and we still ended up with the same comment. Great question. Any more questions? Mary?
Do you do the fire departments for yourself?
No, I don't. I have been asked to look into them a couple of times on different issues, and if I'm asked to look into them, I'll review them. Like I said, I'm very close with our finance director, and if he has any concerns, him and I'll
It's reviews what I meant. We don't file audits.
Yeah.
We just file reviews.
Right. Yeah, our fire districts, I think most of them have to be audited. I think they have to have an independent audit. That's one of the things, too, that I didn't mention here that I should have mentioned earlier. Is people don't always understand what you mean when you say audit. We had our Board of County Commissioners recently come up, and they wanted to audit all the nonprofits. All the nonprofits. They wanted them to have an audit. Well, they don't understand that a financial audit costs us money. And a lot of these little nonprofits are operating on a shoestring. You know, so, and I tried to explain to them that, you know, there's about 10 different types of audits. There's a financial audit, there's an internal operational audit, there's a performance audit, there's a compliance audit. And in some of these cases, some of these people aren't bringing in enough money to warrant an audit being done. But I guess somebody had complained about one of the nonprofits or something. What they ended up doing, instead of requiring them to do a financial audit, is they just wanted to get copies of their tax returns. And so, did that answer your question, Mary? Yeah.
Do you have some model audit programs if we
Absolutely. I prepare audit programs in advance for all the programs. So if I've got one in that area, I'll be more than glad to see it. Yeah, no, I'll be glad to send you any copies you want. I've got them, and anybody in here wants to email me. My email address is tpozza, P-O-Z-Z-A, that's like pizza with an O, by the way, and @clerk, of course. plural.cc, all one word, at Clerk of Courts, plural.cc. But yeah, email me. I'll be glad to send you any audit program that I have. There are also organizations out there, I think it's called auditnet.com or something like that, that has listings of audit programs. And I've used some of their programs now. I think they used to be free, and now you have to join it. It's like $9.95 a month or something. But they've got hundreds of audit programs out there covering everything from cash receiving to fraud, anything you can think about. But it's a real good audit source. No, Jim.
Who audits your hotels for first development?
Oh, Tim, why don't you just go on? No. As far as I know, we don't do any direct operational audits on the state attorney's office. In fact, I'm meeting with them tomorrow at 9 o'clock, and I've talked to a couple of them already, and they've asked about audits that have been performed. We have a TDC person, you know Patsy. She collects the tax, and she audits the hotels as far as collecting the tax and get the, submit correct tax. So she's the one that actually does any audits on the hotel. I'll live with that answer. But as far as doing any kind of operational audits, even on the TDC, the only thing we've looked at in the past few years has been some of their expenses. If y'all don't know, they've been investigated. No Bruce County. For a TDC director, so I think that's why I was. Yes, ma'am.
Tim, going back to what Ken said.
Don't follow up on anything.
Did he say up there that the lead partner for the external audit firm should be rotated every 5 years?
That's for profit for companies. That's what Sarbanes-Oxley came up with. They have to be rotated for a profit company. But it's the lead auditor, it's not necessarily the audit company.
Right.
But yeah, they have to be all rotated every 5 years. Now, if I'm not mistaken, GFOA's best practices recommends that you do that. But it's not a requirement. Any other questions? Okay, I appreciate it, everybody. Y'all have a good day.